welcome everyone to today's report, the 30th of August, not the 28th. Sorry, I didn't change the date. Right. Right. Today I want to discuss one thing, the clues to determine the US dollar direction, okay, going forward. What are the clues we should look for to get a better idea. Now, the prospect of lower US interest rates next month has weakened the dollar, which has previously been bolstered over the past 2 years by the Federal Reserve aggressive rate hikes and expectations of further increases. Now, with markets already anticipating rate cuts as early as September, the dollar's downwards momentum might start to diminish unless fresh data reveal a further drop in inflation and the degradation of the US economy. The extent of the dollar's decline will hinge on the Federal Reserve's upcoming rate decision. A cut of 50 basis points rather than the expected 25 could lead to a further drop. To gauge the Fed's likely rate decision, right, look at key economic indicators such as the preliminary US GDP estimates and the core personal consumption expenditures, i.e. the PCE Index, the Fed's preferred measure of inflation. Now, weaker than expected results could prompt a larger rate cut, okay, putting more pressure on the dollar. So yesterday, the preliminary US GDP estimates for the quarter came in at 3%, which is 0.2% higher than both the forecast and the previous quarter's figure. This stronger than expected growth indicates that the US economy remains resilient, reducing the likelihood of a 50 basis point rate hike by the Federal Reserve. Now, following this, all eyes are on the upcoming PCE price index release, which is slated for tonight, right? Unless the PCE price index delivers an unexpected surprise, the Federal Reserve is likely to maintain a more modest 25 basis point rate hike, which could lead to a temporary rise in the US dollar index. At the same time, geopolitical tensions are contributing to increased demand for the dollar as a safe haven. Ongoing conflicts in the Middle East and Ukraine continue to add to the dollar's strength, underscoring its role as a preferred asset in uncertain times. Notably, the conflict between Israel and Hezbollah has escalated, with a major exchange of missiles as Hezbollah retaliates for the killing of a senior commander. Regarding the peace talks between Israel and Hamas, discussions made some progress over the weekend, but a final agreement remains uncertain. Bassem Naim, a member of Hamas Political Bureau, stated that Hamas did not participate in negotiations on Monday. Speaking to Al Arabi TV, Naim reiterated that Hamas is ready to negotiate what was agreed upon in the July 2nd proposal, but will not accept, I repeat, will not accept the conditions set by Israeli Prime Minister Benjamin Netanyahu. Now, in the Ukraine conflict, right, Russia's recently launched attacks on 15 of Ukraine's 24 regions, perceived as President Vladimir Putin's retaliation for Ukraine's incursion into the western Russian region of Kursk. That began in early August, leading to the apparent takeover of more than 1,000 square kilometers. So as geopolitical tensions escalate, the US dollar has gained strength due to safe haven demand. Now, whether this uptrend continues will largely depend on the upcoming PCE price index data release. So to make it simple, if we have a PCE price index that comes in below data, below forecast, then you will see the dollar actually rising further. But is it going to go very, very far? No, there will be levels before it comes down again. Okay, because don't forget, right now, the Fed has already, based on probabilities, the Fed probably will be cutting rates 3 times this year. So, whatever we see is a temporary relief before the next move down, based on whatever we are receiving at the current moment. Okay, so with that, that's the report for today. Let's move on to the charts.